Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, June 18th, 2008. Well, I hope everyone had a good trading day today. It was another good day trading day across the board as there was some volatility in this market and some sharp moves. And we're going to focus in today on what happened. What caused the markets to sink today? What were we talking about yesterday when we saw the possibility of a turn date coming today and possibly over the next couple days here where we see a shift in momentum in this market? And we're going to touch on that, what we're seeing in the charts and in the time. All right, remember folks, yesterday we talked about a possible move in the markets and we saw two varying indicators. Number one, the charts were telling us a bearish side to things, but we have a time indicator that's telling us right around this time, it was possibly starting as early as today, was going to signal a change in market direction and a possible move up. So it's a very unique situation going on here as we saw oil move higher today and the markets move down. Now there was some FedEx news, some ugly earnings from FedEx. There was some other news out of the financial area, but that kind of became a muted indicator as the Morgan Stanley earnings, even though Morgan Stanley was down over $2 early on, almost $3, it reversed to close higher. But nonetheless, there's a key area here in the charts that we're seeing. And remember, we focus on two things, three things really: time, price, and pattern. All right, so that's the key here. The focus in on that, and then look at the charts. And the charts were telling us again. We talked about that bearish pattern setup on the SPY, and let's quickly look at that while we get into things. Remember this bearish pattern we discussed yesterday, moving right into these moving averages, and this was what was confusing us yesterday from a perspective of two different indicators telling us two different things. And sure enough, we saw which indicator was right. Obviously, the charts here told us that this was a bearish flag pattern moving up into resistance here, and we got that fall today. But either way, the time factor here, it didn't come to fruition today, but it should come to fruition over the next few days. Alright, so keep watching this market this next Thursday, Friday, and Monday for a turn date for a market to switch back to the positive side and start to move up pretty dramatically is very possible. We're looking for a possibility of a move after options expiration, and we know the whipsaw that options expiration is a possibility of a move up based on time analysis. Alright, and again, price, pattern, time are the keys that we look at in this market. The pattern here is a bearish pattern, and we see that come to fruition today with the jump. But again, the time indicators are telling us that there's something on the horizon, and it may indicate a rally in this market. So keep an eye on that, guys. Be ready for it is the most important thing. Okay? Now let's discuss this market on an intraday sense and a daily sense. Number one, the S&P is key here. Remember about a week or so ago in the videos, as we were coming down here, and we said we see a rally here, but it wouldn't surprise us to see a touch on the S&P of 1329, and we got that rally right up here. Now that number of 1329 comes back into being a key player, and if this turn date is going to happen based on time, we may need to touch that. It just seems like we got to touch it. You know, you got to touch that key support, which is going to be major support in this market. So continue to watch that 1329 area on the S&P, which, believe it or not, is kind of coinciding with this support line right down here. And again, we're looking at the daily S&P here, SPY really, but it mirrors the S&P. So watch this support right in here, as this would be where that market could be headed. You could see a move to the lows here, or even a break slightly lower intraday, and then we see that being a near-term bottom in the market before we start a little bit of a move up. And again, we'll evaluate that as we go. It's as I mentioned, with the two indicators showing two different things. We saw the pattern showing the downside and the time showing the upside. They will coincide eventually. Ideally, what will happen is this moves down into the support, and then that shows the bottom on the chart and a rally on the chart possible, and then the time pattern comes to fruition as well, and they both line up correctly and off to the races we go. So we'll see here. This is just what we're seeing in the charts. It's still a fair way away, and we'll have to analyze it here over the next few days, and every day we get a new piece of that puzzle, and we'll have to see it. So again, we got a new piece of that puzzle, and this makes us believe now that we'd probably come a little lower at some point and touch that 1329. That would be ideal. And then we can start to look on the upside of this market. So we'll keep a close eye on that. Now let's go to the intraday chart here of the ES and discuss the moves, because this was very, very interesting how the pattern played out. Now, we obviously know that FedEx came out this morning with some negative earnings. We also know that Morgan Stanley had some earnings that actually beat expectations, but the stock got crushed early on. And let's quickly look at that chart on the intraday. Look at this chart on Morgan Stanley. Okay, so this is where we closed yesterday. This is where we opened today. went as low as here, okay, and then we just started to rally the rest of the day. And Morgan really went to the positive side and then came in a little bit, which it needed to do. But nonetheless, a fantastic rally off the lows from Morgan Stanley. Now, FDX is another story. All right, this chart just gapped down and pretty much stayed there all day. As you can see, here's where it closed yesterday, and here's where we basically traded today. Not pretty there, and oil's crushing them. Listen, who isn't getting affected by oil here? The consumer's getting affected. Companies are getting killed by oil, especially any companies that use trucks or airplanes are just getting murdered by these prices in oil. And again, we saw the reversal today. And remember the USO, folks. Yesterday we talked about this key 108 area as being support. All right, note that. All right. Intraday, after the inventory numbers, we actually traded below, and that's an indicator that you probably will see a little more downside. But just like oil, and in the chat room we refer to oil as like a zombie or a vampire because it just never dies. What you saw here is all of a sudden you saw one spike up, and once it clears back above this 108 marker, this is a failed pattern breakdown, and you all of a sudden expect more upside. And sure enough, you saw that. You saw a little pullback the next candle, and then blasting off. Because the key here is that everyone knows this 108 is a key support. So once they break it, you get a few shorts to jump on board thinking it's going to fall. Once it breaks back above, everyone knows it. Listen, it reclaimed 108. That's a bullish sign. Boom, off to the races, and there it goes. And look at that USO rally, up 221 at the close to 110.89. And in all fairness, let's look at oil here, because oil is basically trading in a triangle here. Not a triangle, excuse me. But what you can see here is this box that it's trading in, and it basically has been trading in a sideways pattern for the last week and a half to 2 weeks. So the question will be is which way does it go? Eventually it's moving out of this box. Don't think it's going to stay in this rectangle for very long. At this point you have support right here, which it almost touched on that dip today, and that's possibly why it saw a little bit of a retrace bounce. But the question will be is which way does it go? The government's doing whatever they can do to push this oil down. The dollar needs to gain strength. Obviously, raising rates. If the Fed wanted to drop oil, as I've said many times in this video, just raise rates and you'll crush oil. Oil will get crushed as the dollar rallies. However, the likelihood of them doing that in the next meeting, which is next week, is very, very low because you have all these financials that would take a huge hit. And right now, it's the regional banks that are getting hammered. All right, we all know about the Morgan Stanleys, the Merrill Lynches, the Lehmans, the Bear Stearns. Now it's regional banks that are taking hits as Main Street, people are stopped paying their credit card bills. People are stopping, all this other stuff. These various loans they were taking, they aren't getting paid back, and the regional banks are taking a hit on that. So you're seeing them take a hit. But either way, USO, which mirrors oil here, is going to break one way or the other. We happen to think that there's quite a bit of downside on oil, but it's a key that it has to break this 20 moving average. You break this 20 to the downside, we think it's going right to the 50 moving average, and look at where that lines up right now. We could be wrong. In all fairness, oil does not die, and if there's one thing that today proved, and again we'll show you the intraday chart, look at this. Bam, right up. It proves it doesn't die very easily. So what you're going to look for here is you got to make sure this clears this 108, and at this point you have to get a drop below this low here today to really see a breakdown coming. Otherwise, you just got to be careful because shorting oil, I'm not short oil right now to be honest because it's taught me too many times that it can reverse like it did today, and you just got to respect it. Nonetheless, should we drop in oil, it creates a rally situation in this market where it could see a significant increase in the various indexes and the stock prices across the board. So it's important to follow oil. Oil is trading directly with the markets at this point. When oil ticks up, markets tick down. When oil ticks down, markets get a bid. As simple as that. So keep a watch on that. Now let's go back. I haven't done the intraday, and I want to show you this. There's a lot of fascinating stuff in the charts today. Here we go. Notice the markets are trading down, trending down, trending down, trending down. We make this little bottoming tail here, which is a signal to buy, and you get this massive, nice push up, and then a topping tail here, and then a massive push down. If I were to take this bottom here and draw it across, directly straight across, and let's do that, notice that not once did a candle close below that line. Now, granted, they broke it intra-candle, but notice how no candle bought, and that's fascinating, guys. Look at the key support that line basically created. And yes, you moved up here, and it was a great short up there off that little topping tail right through the 50 moving average. And if you had bought at the double bottom, you were fine. Because the break of the double bottom, remember, we always like when it flushes through that double bottom because it creates a little bit of a panic sell, and the weak hands move out. When it breaks the low here, this low gets broken, panic sellers come in. That's where you want to take a stab at it generally and buy it there. And sure enough, you got a little move up, then it retraced here, then you got another little move up. You could have scalped it there if you wanted, but you could have waited again for more of a gain. And even even when it came down here and broke again, it never closed below. And you never got a candle that closed below, even though they traded below. And that's the key there. And look at the rally that you got after that. And then it came back in again towards the end of the day, but nothing really, never broke that level. So that's going to be a key level to watch tomorrow, should we see any more downside. So that's pretty much all we're going to go over today, as we are running out of time. One stock we had a tremendous gain on today was Coin. Look at this jump. Basically from 690 to 770 intra-candle. We caught this in the chat room. We had actually had it as a swing, expecting that move. And look at this beautiful chart. You had a necktie formation here. A big move there, and it's a small cap nonetheless, but a fantastic trading stock. Come join the chat room. Come join the Swing Trade Alerts. Watch that 1329 on the S&P, and we may see a turn date on time coming shortly. Take care.